Well. Welcome back to Krown's Crypto Cave. It is an absolutely exceptionally early morning this morning from a very cold, actually, and rainy Helsinki, Finland. It is the first day of July, so I want to wish you a happy 1st of July or midsummer or whatever holiday it might be in your part of the land. There is a lot to talk about today, not just on the lower term timeframes, which, yes, I do want to follow up from yesterday, but mostly the higher term timeframes as markets across the lands have closed monthlies, bi-monthlies, and quarterlies last night or yesterday or whatever that time was for you. Anyways, most importantly, that's actually really changed, or perhaps not changed, but clarified the long-term situation, as it's really going to help guide the good old bias boner for the next couple months to come, at the very least, which I think that a lot of people are probably going to be excited for. Anyways, before we get into that, and before I forget, the summer sale is now available, the midsummer sale, if you want to call it that, or the 4th of July sale, if you are an American over there, or if you just want to celebrate the 4th of July and be a pseudo-American. All good, man, all good. Anyways, all programs are 20% off. If you log into the Krown Trading app at app.krowntrading.net, you can find them right here. There are a few different options that I should probably explain very briefly. These are the main programs that I exclusively do: the Neophyte program, the Technical Analysis program, and then the Options program. All of these programs are, well, I shouldn't say all of them, but the TA program and the Options program are both very long programs, 35 hours plus long. I think the TA program might actually be nearing 40 hours at this point, because it actually does keep on growing. But most importantly, I want to make sure that it's a good fit if you are the type of person who's actually considering getting into one of these, because for most people, these are unreasonable. Most people first do not, like, this is not, the lifestyle that you want to live, right? Like, if you really shouldn't do these if you're just kind of like dabbling around, because, well, it's just not necessary. I mean, you don't need it, and realistically, you're going to need the time to actually invest in these things. So I really want to make it abundantly clear that if you are the type of person to really consider something like this, make sure that you have the time, because if you do not have the time, you will not be able to make the most out of it. And realistically, you're going to be looking at a long-term road to actually make use of that information, especially if you're coming from ground zero. And if you are coming from ground zero, don't even start with these. Start with this one right here, the Neophytes program, because that one is much less expensive and much less involved. And while you're not going to get as much out of it, it's going to give you a good insight into what the other programs kind of have to offer. And more importantly, it will also give you a similar discount on those other following programs. So if you were to get into them at a later date, not to FOMO in or anything like that, then you'd have the same price anyway, so it's all good. So I wanted to make sure that that's clear. Other than that, I'll let you make the decision for yourself. Of course, you are an adult, most likely, watching this sort of content. Watch the videos. They're going to explain actually who they're designed for, who they're not designed for, and sort of the actual curriculum of the content. But again, from what I want to get here before, that's not said in the video, or, well, is said in the video, but I really want to make abundantly clear, this is a long-term trajectory. Make sure that you have the time. Make sure that you have make sure that you also have the, the drive to get through it, because it is quite a slog. And especially for the Options program, that is, very, 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 very involved with a steep learning curve. And well, hopefully if I've scared most people away from doing it at this point, then that's good. For the other programs, we do have subscriptions with the Jewel. We have actually a new program coming as of this month, just for this month, not just for the month, but for the next, for this sale period, where you can get it for 3 months rather than just a monthly fee, a monthly structure, and that's going to have an increased what's it called, discount on top of that. And all the indicators here are 20% off to begin with. This one giving you a little bit more on top of that. And then also you'll notice a new section here with the partners. That's actually for our lovely Jewel creator, Mr. Mournfall himself. He has created what he's going to call the PineScript Mastery program, as that's going to be designed, well, exactly what it shows in front of your face. It's going to show you how to start from zero in PineScript. For those people looking how to, or maybe you're the kind of person who has like an idea of what would make a good indicator, and you just don't know how to put that into reality, that's the program that actually show you that, specifically with TradingView from the ground zero. So check that out. Again, watch the video on it as well, because it's going to explain exactly in plain English, well, in plain English with a sexy French accent, or maybe sometimes hard to understand French accent, implications of what that program does. So definitely check that out. Other than that, I'll stop shilling myself over here, and let's get back into the nitty gritty of this, as we do see that the open interest actually coming down a little bit below 1.9 billion yesterday, from yesterday to today. Now, there was a great request actually yesterday to show the last 24-hour difference between the open interest from yesterday to today. I think that actually would be relatively interesting to see right here. But also keep in mind that in the data tab, you can actually get long-term charts for these sorts of things. Well, long-term as long as we record the data, because for right now, as you can see, we've been recording it since about late May, and it's just going to be a matter of time before we've collected enough data to really, have something cool to show here. But for right now, you can actually, you can obviously get that information as well, and then maybe we make that a little bit more visible on the main page too over time. Anyways, going back into it right here, let me go back to the dashboard. There we go. So what does that tell me? It tells me that essentially we still have yet to see the big bad resolution from the range that we're looking at on the higher term timeframes here. We've seen some interesting go arounds with open interest in the more short term timeframes, kind of rising up with price action going down, and then also falling off on the open interest while price action goes up, which is indicative of a little bit more of distribution. But realistically, until we actually see a break, like a clear change of behavior here, above or below the critical levels on the higher term timeframes, which yes, still are the same actually for Bitcoin, although with the last monthly close, things do change with their interpretation a little bit. Then we really don't have much to make off of this, because this is still, again, novel information right now, as I don't really know of anyone to my knowledge compiling the same sort of information that we are right here with also the same sort of efficacy as well. Because, well, what you'll find is when you actually start tracking this data, a lot of exchanges not so scrupulous, I'll put it that way. Anyways, so now I want to get into the charts right now, and we're going to start off with the most important thing. Boolahs, get your boolah boner ready, because I got something for you right to start off this morning in the early morning hours, and here it is. It's in front of your very face. I know that you hate it. I know that you fucking hate it, but cryptocurrency anarchist, crypto anarchist, if you want to call it that, beautiful terminology spun off by Peter Brandt, which I'm a big fan of, which is kind of funny. And it's not that I like even hate the crypto space. Just it's funny because there definitely is some of that going on for sure. But as far as monthly closes go, absolutely phenomenal. But what's even more phenomenal than that? A higher term time frame. How about 3x that time frame? Well, go fuck yourself, because triple monthly right here looking phenomenally well as well. So yes, I do think that we can have a pullback here, down to especially last tri-monthly open, somewhere right around like 97.50. I think is very, very likely. Even all the way down to 87.50 is really not all that out of the question. But as you can see right here, the trend is very clearly up on very high time frames, and I would be expecting new all-time highs coming into the next month and probably the month to follow after that. Yes, pullbacks can happen, and I do think about the same thing on Bitcoin as well. But a lot of, with the way that the monthly close, I think that is very unlikely that we see a full-on macro reversal. So for all the people who are worried about Bitcoin or maybe even cheering on Bitcoin going down to like fucking zero or something like that, I don't think that that's what's going on here, unless if acted upon by some sort of massive outside force like a World War III type catalyst. But other than that, this is phenomenal chart right here. And I would be looking for it to have continuation coming into the next month. If we go down to a daily, we also had a phenomenal close there as well, confirming the hidden bullish divergence. So I was certainly wrong about this turning into the next sort of pivot down to that 9,500-ish region. And the hidden hidden bullish divergence did win out as Nasdaq futures heading back up to the $10,100 target, which is the target from that hidden bullish divergence read. And now what does this look like? I mean, it looks, well, for first things first, it is an uptrend, higher highs, higher lows, and then also kind of formulating its own ascending triangle right here as well, which we can just put in very lovingly like this. Actually, let me reduce the width of this. Yeah, the girth is too much right there. And again, I do think that things can very easily come back down to 97.50. I think that should correlate likely with this low right here. Yes, indeed it does. So let's actually mark that area off going forwards. That would very likely be an opportunity, at least for a scalp on the first pass. But if things really did start to actually break this area right here, I would look for the lower levels to get hit on the monthly. But that's not to say that it's a reversal on the monthly. The monthly is not reversing anytime soon, unless if it closes next month below like 9,500. Then yes, we could talk about a reversal back down below the 9,000s and probably further over time. But that does not seem that especially looking at the higher term time frames, which the monthly is for traditional markets, but realistically the bi-monthly and the triple monthly are like what the monthly are to Bitcoin is at this current time. And the bi-monthly right here still looks pretty damn good to me as well. it's got a lot of levels down the way, so there would be plenty, or very likely, you never know. We've all seen crazier things, but very likely a lot of a lot of prior warning. And so for right now, looking at especially the daily and then kind of matching up with the 3-month, it still looks pretty damn good to me. And if we are looking at this as an ascending triangle, we do have a resolution point in two ways: either a daily total closure above about 10,000. Let's call it 10,200. I'm adding about $20 delta on there, just to kind of be more conservative. Or if it does take out the last prior spike high at about 10,300, I would be looking for the measure move on this as an ascending triangle to play out, which is looking about right. If we do look at this, something like this right here, it's not super accurate, but gives us kind of an idea. And I would actually be pointed towards about 11,000. Hold on, let me. Why can't I see over there? Hold on. Yeah, about 10,700-ish region, which is around the 1.272 Fibonacci extension right here. If we're looking at this as a bearish retracement, which obviously it is not, but still those Fibonacci's, they're going to naturally line with each other either anyways. So those extensions actually do tend to accurately get those levels actually rather well. So I'm actually going to mark that one off right here, make a nice little zone. This is going to obviously be, for the very high term time frames, and kind of leaves up a big zone to begin with, between about 10,750 and 10,650. Actually, only $100, so not too big of a deal right there. But overall, my point is that generally looking higher on traditional markets, yes, I do think that there's going to be pullbacks along the way. I think that 97.50 very likely gets tested at some point, but that's very likely going to be an opportunity. And with, obviously its own faults as well. But as long as you're above 97.50 or even especially 9800 or wherever the 21 is right now, which is actually even at 9900 above the last prior low, I mean, all this looks pretty damn good to me. As long as you're above there, there's really no even like daily talk of reversal here. And if the daily did reverse, I would look for another swipe down to that 9500-ish level. But same thing there. It's really not till we get below this level right here where things can actually start to have some more interesting downside long-term implications. So now let's go over and check out Bitcoin right here, as Bitcoin following through not as impressively on a monthly close. Let me bring it up. There it is. Let me just make sure that I'm recording. I am recording and the microphone's working as well, so that's all good. And if we go over here to no, that's not my monthly. Let's go to a monthly right here. There we go. Okay, beautiful. If we look at the monthly on Bitcoin, it obviously does not look as strong, but assuming that there is a strong correlation between basically everything in the world, not just Bitcoin and traditional markets, but pretty much fucking everything, which we have been seeing and we can prove mathematically as well. If I do want to bring up Bali's tools right now, which maybe I'll save that for tomorrow's video actually, because this one's going to be long enough anyways. But looking at this right here, it would change the implications of a downside break. So I want to be very clear in stating this. Even with the strength in Nasdaq here, I do still think that Bitcoin can actually break to the downside, and the levels to the downside are still very much relevant. The thing is that the implied move to the downside would not be as severe with the way that Nasdaq kind of closed, especially yesterday, which I believe is just the easier chart to read. So looking at this right here, I think it's appropriate to actually remove this trend line now because it's not working. Or I mean, it technically is working. If you actually want to go down to it right here, it technically is working. It actually does. Actually, you know what? Yes, it does offer up a nice edge right here, just because this area does correlate with that last prior high, but we could just as easily put in a nice horizontal there, and that's why I always default to horizontals when in doubt. But technically speaking, if we are expecting the downside in the more immediate time frames to play out, we do not expect a 4-hour closure anywhere above about 9200-ish region. So if that does happen, not only obviously 9300 is going to get tested, but very likely probably back around 9500, and maybe this thing flips around fully from there as well. But that topic's still not had until, well, realistically above 9900 to be fair. So for right now, could Bitcoin still break to the downside? Yes. And actually, I do think that is rather likely, especially as long as we're playing out that 4-hour death cross. However, like I said, the implied breakdown levels would not be as severe. So realistically, levels to the downside, more accurately said, are going to be in line with the major areas on the monthly here as well. But here's the thing: because the monthly did close above the, I believe it was 89.50 pivot. Yes, it was, and now it's actually at $100 lower, 88.50 right here. here. But because the monthly did close above that level, we actually are going to see monthly Stokes still remain to the upside here. Yes, they are hinting at across the downside as well. But that's only going to happen if this next monthly closes below 88.50. 88.50 happens to be actually it's not around the 10 symbol. Interesting. Anyways, more importantly, 88.50 is, is a good area to begin with, just because it does show, or no, that's the wrong thing to say. What 88.50 is that it's also the low of last month's dildo. So if we actually do take it out to the downside, not only will we confirm this as a nice doji dildo, which typically is a sign of indecision, perhaps even reversal, which would can constitute continuation, but we'll also see monthly momentum oscillators turn down at the same time. So there is still downside threat here. It's just the downside threat, I would argue, due to the strength in just traditional markets in general, in the world market, which we're all in this fucking same ship together, then it would imply less damage done to the downside. So very likely, maybe, very likely down to about 8,000-ish region. But I do believe that it'd be very difficult to get a monthly closure below the 21 exponential moving average on the monthly here, which is about upper 7,000s right now, and rising over time. What's also very interesting here is that we do see a positive slope on the 10 simple and the 21 exponential moving average still maintained here. So yes, I want to be very clear in stating this. The short-term and medium-term downside can absolutely play out, no doubt about it. And because we are dealing with big numbers, it will look, it will be a, could be as much as a $2,000 drop. But I would mostly look at that as an opportunity. Again, assuming that, we don't see any like major falling apart in traditional markets. So that was a pretty critical close that we saw last night, because it wasn't just the monthly, it's also the quarterly, which is very, 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 very important for traditional markets. And it's a chart that only a hater could hate, because, well, haters just hate shit, I guess. I fucking hate that word to begin with. Looking at monthly RSI, same thing here as well. It's still maintaining above the exponential. Do need to see it close this month above 89.50 as well in order to maintain above it still. So you can kind of like see the stair-stepping nature of this, but realistically right now it's still a game of it's still a game of support and resistance at the end of the day, as far as I'm concerned as a trader. But this does really help kind of set in the long-term biases essentially. So going back down here to a daily, there's a couple more interesting things that I think actually make this a lot easier to trade. Looking at daily Stokes, we are seeing them come down to the bottom side of this structure right here, which I don't care about formations in Stokes, but I do care about trend lines, and I would consider this a test of the bottom side trend line, just like I consider this a test of the top side. They're more so regressions than anything, especially on Stokes. And what's interesting about this is that we will see it cross back up to the upside, or alongside a bounce of that lower level. If Bitcoin does close this next daily dildo above 91.30. What's very interesting about that is that 91.30 is right around the 55 exponential average, and very likely would catalyze another move back up, at the very least, to the 10 simple, probably the 21. And what's also interesting about that is that it would also include, man, I'm struggling for my words today. If you're wondering why, it's actually because it's the first morning in maybe like half a year that I haven't drank coffee, because my coffee machine seems to be broken right now. Anyways, looking at this right here, if we do take out 28th of June's high at 92.36.75, or get that 4-hour dildo closure above 9200-ish region, I would look for a quick move back up towards 9450, 9500-ish region, play out the short-term range here, which is still the same essentially. But then we got another stint in the range of fucking doom and death and decay right here again. However, I would say that that's likely setting up for a break to the top side of this. However, is there going to be short-term scalps playing off this liquid zone right here? Probably yes. So fair enough. Multiple ways to kind of skin a cat here, and overall, still looking at these levels kind of acting the same way to the upside, still the same relevant levels to the upside. I can't get super bullish on this as a trader or long-term investor, or even as a moon boy. And well, moon boys can get bullish off of anything, but I really can't get even moderately bullish off this until Bitcoin's closing, especially daily dildos above 9,900 or 10,000 for the more conservative guys out there. Even 4-hour dildos above that level are going to look pretty damn good as well. So So the same levels to the upside are still going to be essentially implied. There is an implied move from this structure all the way up to about 11,000, just north of 11,000, about 11,100. And that would obviously imply a higher high above the February highs that we saw in earlier this year in 2020. And so that would obviously then very, 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 very likely catalyze the next major area, which we do see coming in around the 11,500-ish region. One of the present gaps that are still available on CMEs coming in from August 2019 right here. And that would very likely be the next macro area. So, while Bitcoin very likely would get a free ride to 11,500, which again, is the same area that it's been getting rejected from ever since, January 2018, couple double top in February right after that. Then about a year later in July, and a month later after that in August. So it's been tested once, 3, 4, 5 times, testing it for a 6th time, very likely to break at that point. Not guaranteed, but if you're talking about supporting resistance, it does get weaker with each and every passing test. So if Bitcoin were to get there, I'd say that it'd probably, set up for a nice move to the upside. And, well, then we can talk about 14,000, 16,000, 20,000, and Moon Boys. Get your lubin ready because it's time to go and dry on those Bitcoin barras. Although there's going to be some nice downs in there as well. I mean, Bitcoin plays out fucking 30% downs like it's, like it's nothing. In fact, that's like almost a regular pullback. And that's also the next topic that I want to get into right now. Okay, so with all of the nice things that I've said about Bitcoin recently, I need to be very, 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 very clear. It's not to say that there's not still a threat of a downside move. There is. It's just I look at that as more so an opportunity for a long-term play. And the levels to the downside, as we spoke about, I just want to highlight them first before we go into the new stuff, are still the same. 8,900 to the downside right here very likely does constitute the next move down to test around 8,700. Going level by level, I'd look for the next test down to the last prior low before that, 8,500. Also the 200 exponential average. Funny how those things match up. Then we got the 382 coming in around 8150-ish region, which I do believe was something major, maybe on one of the higher term timeframes. I think the 2 weekly, which I haven't really talked so much about. And there's still actually a measure move from this formation right here that does point down to about 7,500, which is also synonymous with an 0.5 fib and a nice historical level as well. So what's interesting about this is, again, I don't necessarily have a specific target in mind if Bitcoin were to officially break to the downside, and I do believe that I jumped the gun by really constituting this as the break to the downside. Perhaps I have, but I actually do. I'm going to show plenty of things that actually do suggest that maybe not so. And actually, we do have another move to the downside to wash some people out before potentially another reversal. But overall, as long as we're below 9250, especially, or even 9300, there's really, it still is technically pressured down. It is pressured down, but, let me just make sure. Okay, cool. All right. Weird things going on in my other screens. You never know what's going on here. But yeah. Technically pressure is down from that perspective, as long as we are below, especially 9250-ish region. So it is, it is still tight margins within this region. But now I kind of want to show why I do still think that there is a threat of a nice healthy downside move. So going back on over here into, so we start off with the weekly. Yeah, I'll start off with the weekly really quick. Okay, so the weekly is very interesting to me on Bitcoin, as we do actually have hidden bearish divergence on weekly MACD right here between this point in February 2020 this year, and where we are right now, kind of more accurately on June, the June high right here, somewhere right around 9,700-ish region. So the reason why that is relevant is because typically when we do get hidden bearish divergence on a time frame like this, it's very likely to come back down and test around the 20 symbol, which is, funnily enough, where that gray moving average is on the Bollinger Bands. That's all it is, just 20 simple right there, which actually even does have a little bit of a negative slope. Kind of nasty, to be fair. Also, on top of that, I do want to put the focus on the Stochh RSI, which I usually don't talk about at all. I'm actually quite obtuse to it, but there is some interesting reads here that are not shown in weekly Stochh. So I do want to highlight that really quick. And if you're not familiar with Stochh RSI, it's basically just stochastic on an RSI. But for some reason, it got really popular a few years ago, and then I think most people who are using it probably just got wrecked. And so, sorry, probably shouldn't laugh. Not funny. Just kidding. But it's not funny. Getting wrecked is not fucking fun. But basically, there is a very specific read that actually does produce some pretty nasty pullbacks in Bitcoin's history, especially coupled up with what we see on weekly MACD here as well. So what do I mean by that? Well, anytime that we see the weekly Stochh RSI get into the critical zone for either the bullish or bearish controls, it doesn't matter, and then it comes down back below that same area. So for the Stochh RSI, it's going to be an 80 read right there. That's actually when we do play out some pretty nasty pullbacks. Now, this one obviously right here, not necessarily a pullback, but look at where that level comes down. It's actually on this dildo right here, getting, from closure to closure, 37.5% move to the downside. Interesting, right? Okay. Well, let's go to the situation before that. We see that it gets above right here, spends a lot of time confusing a lot of people, and a lot of people got very, very short over this right here as well, I remember, but it's not until it comes back down below this level where it's actually actionable. And when does that happen? That happens actually right here, literally right here. So maybe not on the exact high, but on a pretty damn good high nonetheless, getting ready for, a 46.25% retracement over the next few months. So it's not necessarily going to happen like the next day. Or even the next month. Actually, this one happens quite literally from July to November. But things do get moving after that. To be fair, if we do take it from that point, we could still look for like a 39.5% retracement about 2 months later after that in I believe it was September. But let's keep on going through it, as you'll notice that there's a very specific number being shown here. Also, this area right here showing this is essentially the $20,000 high, getting this dildo right here. This one, obviously, a little bit more of an outlier. Almost immediately does get about a 51% move to the downside, and a few weeks later, about 69% move to the downside. Then we got this read right here coming back down below that critical zone. What do you know? Another almost 30% retracement, and that's on the lower end. As you'll notice, we have another example right here coming back down below the critical zone on this dildo, and what do we see? 30.5%. This is also within the context of a bullish market, an overall uptrend. We have another one right here, which this one gets a move from, well, let's take it from the top side of the wick actually. Let's remain consistent here, 33.5% about, and then we got this baby right here, all within the context of an overall bullish trend, giving you another 38.5% pullback, bro. And let's just play around with numbers for a second. So on the lower end, 30%. On the upper end, I mean, it can get pretty fucking nasty, but I don't think that's what we're looking at. However, on the upper end, we can see 69% pullbacks as well. So realistically, an active range between about 30 and 40% is what we see normally on a read like that, especially when it is in the context of an overall macro uptrend. Funnily enough, we're actually not in an overall macro uptrend right here, unfortunately. But what we do see is, what we can kind of play around with right now is that if we were to shave off, let's say 30% off this price action, that actually would put things back down in the low 7,000s. Or if we did this from if you did it from a closure perspective, it actually have a lot lower target. Yeah, actually around 6,900. So perhaps that is still available there. But I would, as I said, be looking at it mostly as an opportunity if things did hit down around there. So a little bit of doom, a little bit of gloom in this video today. On the upper end, obviously, if Bitcoin was a shave like 50% off here, that puts us at our last prior low. Then we got a big problem. If it were to like really have one of the worst signals, like a 69% signal, that actually puts us down at the last macro low in December 2018. So all these things do matter, and they do all play into each other. But because of the way that traditional markets did close, I really can't get I would not look for a different trend on the macro timeframes, like a monthly, like a quarterly, that we see on Nasdaq futures or any traditional major indice versus Bitcoin or basically any major asset essentially. Okay, so while we are here, let's actually go back to, let's do it on this chart right here. Let's go take a look at the accumulation distribution indicator. Bolly's actually making me a new one right now, which I'm pretty damn happy about, but for now, still have to use the old one. And whoops, I think it's in my favorites. Yeah, there it is. Let's see what it's printing right now. Yeah, it still retains a positive slope coming into this month. So again, setting in the bias boner, that it makes it very difficult to be long-term bearish based off of something like that. Does that necessarily mean that I just get, super boolah-ish right from here? No, absolutely not. Like I said, it is certainly not out of the realm of possibility, and almost in some ways likely that Bitcoin does head down to the upper 7,000s or maybe even lower 7,000s, which is a $2,000 move from where we are right now. But like I said, I do think that would act as an opportunity, and I think it's quite visually apparent on the monthly Trollingers as well. We can see that the 20 simple is coming in around that upper $7,000 level. And from a monthly Trollinger band perspective, things are okay here. Maintaining above the median band is generally a good thing, especially an accumulation zone above it, which we kind of see with a very this is some serious fuckery right here with that close. But you do see things like that, and that's why you do need to see opens and closes essentially for confirmation. But in that case, it does still hold true, and obviously with the positive slope on top of that, it would imply long-term good. But again, we're dealing with big numbers, so long-term good does not mean that we can't have a $2,000 move to the downside. It's very, very possible. So yeah, all right, cool. Let's see. I haven't even looked at the quarterly on Bitcoin. Let's go look at the quarterly on Bitcoin. I'm curious what it's going to show as well. Yeah, quarterly on Bitcoin looks very nice as well. But again, big ranges here. We can very easily come back down to this last prior low and test around there. That would be the mid to low 7,000s, and it would still be an uptrend. It would still be overall good. And from a momentum oscillator perspective, still good. Let's see what the reverse Stochastic indicator cross would show. Yeah, 92.75. Funnily enough, we're right around the corner from there, about $100, $120 below there as we speak right now, with 3 months left to go to closure. So how helpful is that? It's not helpful at all, but it would suggest that by the end of this by the end of this closure, do need to see continuation actually, if this is going to follow through, of course. Otherwise, things will naturally float back down, and then we can maybe flip around the long term bias boner once again. But with that in mind, it would suggest in this next 3 months probably do see some movement here. In that same direction, if we are going to play at the upside, very, 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 very likely. Okay, going back down into the lower term timeframes, we haven't really spoken about these all that much just yet. We're already 30 minutes into this video. Holy shit. Okay, let's go look at the 2-day before we go into the lower term timeframes. 2-day showing about the same thing as the daily, using the last 2-day high at 92.40 as a nice little pivot point. If Bitcoin were to take that out to the upside, I would very likely look for extension to 90, 95-ish region, give or take about $50 there. 2-day Stokes are coming down very aggressively here, while price action is still maintaining on a 2-day higher highs and not higher highs, but higher lows for now still. And that will flip back around momentum-wise above 94.50. So keep that number in mind. It is going to be closing not today, but tomorrow night. For a 3-day, we closed one. We did not close one last night, actually. We close it tonight. Interesting. 3 days actually a little bit more of a difficult chart to read. It does say that next level to the downside is about 8,700. So I do like that area if Bitcoin does get a short-term breakdown. So let's go down to the short-term timeframes now. And speak about this. And the 4-hour, I think, is actually getting things very well here. So there's multiple things going on in the 4-hour. Maybe I'll even not just, well, fuck it. Now we'll go through all of it. But the 4-hour is very interesting here because taking this off right now and not really spoiling the picture, but the 4-hour is still in a downtrend. And well, actually, there's a higher low right there, higher high right there. I wouldn't say that's confirmed flip just yet, but more importantly, we do see that the 4-hour death cross is very much in play. And as long as we're below the 55 exponential moving averages, as long as it has a negative slope, it is what I do look to play out actually, because this does have a pretty damn good history in Bitcoin land. Definitely check back for yourself. But while all these major moving averages start to turn down in this time frame, it does certainly gear the odds towards the downside here. But most importantly, what we also have is declining highs as far as this sort of trajectory right here, which is more interesting when you look at it from a momentum oscillator perspective, of which we can see that if the if the 4-hour does close below 91.70, which is essentially where we are right now, about $20 below. With 3 hours and 10 minutes ago, it's not even really worth talking about right now, although the ranges are so tight on Bitcoin that maybe it is. But you know, as long as Bitcoin's below there, pressure is down in the lower term time frames, and technically speaking, I'd still be looking for the hidden bearish divergence that we see on 4-hour RSI to play out between this point, and this point. I mean, well, actually, it's just going to be between this point and this point. Come to think of it, man, I am so fucking dumb if I don't drink coffee. This is insane. I think I'm addicted, actually. It's kind of crazy. I feel like I'm operating off a 9-volt battery right now. But overall, you know, if Bitcoin does close this next 4-hour delta below basically where we are right now, 9150, momentum remains to the downside, and I'd be looking for this to come back down very likely and fulfill the hidden bearish divergence play down to like 8950-ish region, maybe even 8950-ish region, give or take about $50 there. That would be interesting just from looking at a continuation perspective to the downside here, because if we do see a move back down below, especially, what was this? 26th of June's low at 88.30, spot 6.3, then extremely likely we will see that move down to the 200 exponential moving average, which is in line with the last major low that we saw from 10th and 11th of May at about 85.50-ish region. So that's a nice $200, $300 play right there. And I would expect a bounce there, and very likely that bounce actually does get sold into, and we will play out the downside levels that we look at on the monthly. But like I said, I would be of the opinion that that is going to be an opportunity, not death and decay, which is overall good. And looking at the way that the daily shaping up, you know, I mean, if Bitcoin does take out that 20th of June high, I would very likely be looking for a move to 9,500. Who knows how long it takes to happen? I mean, this thing's slow as fuck right now. But volume signature on this formation as a whole is so damn mature that I would realistically be looking for resolution today. This is more than 75% full at this point. Now, someone had a really good question the other day. What happens if it gets like the very apex and there's no break? Well, it's actually, it certainly can happen. It doesn't happen very often, but I have seen it happen. There's actually a good example in 2018 where it happened on Bitcoin, and then it just created another bearish signature, actually. And then it broke down, which is fucking hilarious because everyone was kind of like banking on that. But what will happen is if it gets like this full right here and it doesn't necessarily have a resolution just yet, and a resolution constitutes a move down below essentially the structure right here at the very least 8,700 to the downside, to the upside 9,900. Then what will happen is we'll formulate something new, and it'll get maybe like on a daily about like 7 to 10 days perhaps of kind of aimless trendless bullshit, where the former can still kind of take over, and then it'll just start to formulate something new, because at that point, it's the hand has been played essentially. Okay, all right. We didn't even look at the 12-hour, did we? All right, let's go look at the 12-hour, huh? 12-hour momentum, we can already see, is to the upside as long as we're above 9,000, which is interesting, because that is essentially where the last 12-hour low is as well, 9,000 right there. So as long as we remain above there, 12-hour momentum is to the upside, and that would give Bitcoin a nice chance to take out that 29th of June high at 9240-ish region on this is stamp right here, and then initiate that next $250 move to the upside, where we can play off the next blue box territory. But I didn't fully flesh out the downside just yet. So, wow, historical volatility percentile on the 4 hours is extremely low as well. Jesus Christ, man. So and it is equally as low on the daily as well. And this is like the moving average on this is not only just meeting the historical volatility percentile, which is like rare enough, but it's all starting to flatten out. So meaning that the moving average actually reflects what we're doing right now. It's kind of crazy. You don't see that too often at that level. It does happen. Obviously it happens, but usually you have to be very, very patient, like, a few times a year, maybe at most. Anyways, I didn't go over the very low time frames. We'll do that right now. Looking at the 3 hour, are we getting anything here that we're not seeing on the 4 hour? Kind of. It obviously leads into the 4 hour, but same level shown for turning momentum back up or keeping momentum back up to the upside, which is 91.75. So needs to close this next 3 hour delta above there, which closes in an hour and 5 minutes. Bi hourly showing that momentum will actually shift back down to the downside if we close below 91.20. I don't really look at that as very helpful. Hourly showing 91.40 to the to keep momentum up to the upside, so a little bit more helpful, but again, that would really only apply a test back up towards 9,200. So got to deal with that $40 delta right there, which Usually not gonna be a problem for Bitcoin. Bitcoin can fucking sneeze and move 40 bucks. But in today's day and age, when things move fucking slow, well, you never know. Let's go look at CMEs as well. I actually haven't even checked in on them. Let's see. Let's go to the daily. Looks like the same chart as spot, really. Same levels relevant. I'm looking at this continuation point right here at what was this, 28th of June low. That's going to be 90.50. I'm going to put an alert right there. With a move below there, I would look for extension all the way down at the very least to about 8,800, and that's going to correlate with that 8,700-ish level on spot price action. Probably look for a short-term bounce there, and then overall crumble down to the 8,500-ish level on spot, which is going to be akin to about 8,600 on CMEs. Not really worth looking at the monthly on CMEs just because it doesn't have enough history there. Only has a little bit of almost 3 years now, but still not enough. Not even enough to populate. Well, you could get a little bit of a 21 moving average, so that's okay. 4 hour still under pressure as well, still maintaining the downtrend. So we do still see the 4 hour downtrend actually relevant on CMEs. It's not necessarily there on spot price action. So I do default to CMEs when in doubt, and more importantly, momentum on the 4 hour will once again turn to the downside if we close this next 4 hour delta below 91.69 on CMEs, which have about a $50 to $60 premium on price action from spot price action. So it's actually, it's got a little bit of a buffer there if you're watching this probably around the time of release. Let's go down to an hourly. Not really helpful here either. Okay, let's go check out Mr. Beaterall. Here's how he's doing. How are you holding up, Mr. Beaterall, in all of this nonsense that we see around the world? Monthly, very, very inconsequential. Still kind of aim towards the upside here, but again, if Bitcoin were to really turn down hard, I'd look for Buteral to come down to like 190-ish region. Let's see, is Litecoin even worth looking at? Litecoin looks absolutely abysmal. Litecoin's bearish as fuck. If I was just looking at Litecoin, this is making like a monthly descending triangle. It's terrible. But if Bitcoin holds through here, is Litecoin going to break down? No, very unlikely. What about Stellar? Nah, shitty. What about EOS? Nah, shitty. What about Neo? Nah, actually not as bad as the other ones. Actually not as bad as the other ones, to be fair. And same thing with Tron, funnily enough as well, like the two ones that people typically talk shit about. Let's go take a look at GBTC. GBTC looks under pressure as well. GBTC says that we do break to the downside. We have new lows on GBTC. It's basically where it was on 1st of May, which I believe is the low 8,000s, that 8150 tick. And GBTC typically does lead to the downside, so I think that this is relevant here. And let's take a look at the monthly here as well. The monthly kind of had like a crash to end it. I do not like the monthly on GBTC actually, and it will actually cross to the downside here as well. GBTC says be careful, man. GBTC says not so fast, Krown. You're being silly. The downside is more likely. And I do think that downside from this region here is more likely. It's just I look at that as a long-term opportunity. I don't think that Bitcoin is going to like fucking zero or anything, based off that last monthly and quarterly close. Yeah, keep on looking at the daily here. Nice, lovely gap to come down and fill my Angus at 8.9. So that would probably be akin to this is 27th of April. I'm gonna guess that that's around the mid 7,000s. Let's see, 27th of April. Mid 7,000s, actually 7,750, which is the monthly 21. Very interesting how that works out. So yeah, I do still think that downside from this region probably more on the likely side, but it's just very likely to be an opportunity long term. Let's go check out probabilities. So let me let's first denote what the critical areas are here. So to the short term upside, 92.50, I'll call it, or no, let's keep it the same as last time, 9,300. Better to err on the side of caution here. And while if Bitcoin does take out that 92.40 high, very likely does surpass 9,300 as well and take that move to 9,500. But keep things consistent, I suppose. So what I'll do here is we'll go to a daily. Yes, okay, we're already there. I've still got 9,300 in there. To the downside, we can use this spike right here at about 88. We'll use 8,800 even. Okay. By the way, rings are starting to turn down on this one. Yeah, I actually do think that short-term downside is still there. Just the long term, I'm not so confident on. Also made a few changes to Bally and Pig's mom over here as well, which we can check out too. Anyways, looking at the probabilities of this, still about 33.25% to the upside, above 9,300, which again is only the short term, only relevant to the short term timeframes. Below 8,800 is 21.5% probability, which is relevant to the higher term time frame. So a lot bigger implications for something like that. So I would take care with that, of course. Let me just make sure that this is going well over here as well. Okay, cool, good. Sorry, I lost my train of thought. Let's put this, yeah, it is on current, but it's showing kind of the same things as future. Anyways, let's go to a 12-hour as well. I'm curious what the likelihood of seeing this break on the next 12-hour closure. It's going to be almost 29% to the upside versus 12.5% to the downside. But let's now kind of standardize this. Well, it's not going to be standardized, but let's, instead of using the short-term time frame range, let's use the, hey, fuckface. There it is. Instead of using the short-term time frame range, let's use the medium-term time frame range, 9,500, which very likely catalyzes a move back up to the top side of the range at 9,900 to 10,000, and that's going to make it look really, really good and very likely break out to the upside if that were to happen. This is actually less percentage chance, or sorry, less probability than what we see for the long-term downside trigger. So keep the implications there in mind, because it is still angled towards the downside, and the downside is still more likely. And I do think that things break here to the downside. It's just long term. I don't think that Bitcoin's breaking down to like 5,000 or 4,000 or 3,000. Can that change? Yes, obviously. If Bitcoin starts breaking back down below 7,000, we'll have something new to consider. But I feel like we're going to have a lot of prior warning if something like that were to happen. Then again, maybe I'll just get a girthy red dildo on my face at that point. But going off of Nasdaq and the strength in traditional markets, if there was a time that Bitcoin was going to be allowed to move up, this would very likely be it. On the long term look on this. Even regarding a move $2,000 lower from here. That's kind of my point of today, and done in a 45-minute long video. Wow, fucking wow. Jesus Christ, man. Whoever's listening at this point, like, you are a true believer in, you're not a true believer. You're just a true fucking TA nerd like me. And you know what? That's why we're friends, my friend. So show yourself. It's good though, because that's why I do these videos, man. I enjoy fucking doing it. Like, I don't need to do this, but I really truly enjoy doing this. So it is cool when some people actually appreciate it and get something from it. Like, that's fucking awesome, man. Other than that, I'll just keep on talking because, well, that's what I'm gonna fucking do anyways. So yeah, again, to kind of wrap up my thoughts here, let's go back to our GDAX chart with all these time frames plotted out, and what's the right way of doing this? Technically speaking, a move above the 29th of June high very likely does catalyze a move to 9,500. Is that the best way of doing it? No, it's not. I do think that it's important to kind of state the state that, of course. As I search my words again, no coffee is no good apparently. Above 9,300, extremely likely that we will see that move to 9,500. At that point, I would look for a short-term pullback from there and then set it up for very likely another move higher above this level. Especially, I shouldn't say that. I should not say direct things like that. What I should say is, if Bitcoin closes above this level right here, 9,500, then yes, we're very likely to see another move to the top side of the range, and this is going to look very good from a macro perspective, from a higher term time frame perspective, setting up for a breakout to 11,000 and beyond, as we spoke about earlier. But as long as even like the 4 hour is closing below 91.50, we are going to see momentum remain to the downside. Trend remains to the downside on CMEs, on the lower term time frames, and I would look for a retest and play out the hidden bearish divergence at 89.50ish region. If 89.50, or sorry, how do you want to do it? Let's just call it 8,900. If 8,900 gets closed below on a 4 hour dildo, I would look for extension all the way down to about 8,700. It's only really a $200 delta right there. Or could just look for a wick below this wick right here. And then I look for another short-term bounce right there. That bounce extremely likely gets sold into if Bitcoin does break the structure right here. And I'd look for a return down all the way to, well, at that, ultimately I'd look for 81.50 at the very least, but I'd expect another bounce at 85.50 as well. Same sort of synopsis there too. Another bounce that likely gets sold into. So at the end of the day, a little bit of patience here still goes a long way, even though markets really is testing, especially my patience at this point. But the levels are very clear. The long term is very interesting. So I am very much looking forward to what the rest of this week brings. I'm going to be signing off here. I want to once again wish you the best of the best and the happiest of the happiest, because why the fuck not, man? We could use some more of that in the world today, especially with everything that's going on, man. Anytime that I boot up Twitter, it's like internal wars, and so I think it's important to always reflect on that. Anyways, I suppose that's it for this video. Take care, and until next time.